gentlemen, it is February 10th, 2021. I'm here with Patrick Downey, CEO of Orezone Gold. Orezone trades as ORE. In Canada, in the US, it's ORZCF. As if you're a shareholder, you're obviously already aware of this, but for those of you that aren't, Orezone has been working for a number of years on the Bombori project in Burkina Faso. They brought it along. They've got a nice oxide and a large sulfide resource. They've just finished putting together what I consider an extremely good finance package to take the oxide at Bombori into production. Construction is actually underway already. And I wanted to go through this with Patrick because really I think people need to appreciate how good a package this is, because this is a very good finance package. There are a lot of nasty things that are usually associated with mine financing packages that I expected to see when this was closed, and as it turned out, none of it was there. And that's a credit to how good a job these guys have done bringing the project along, and the contacts and the experience they've got to be able to get this kind of a deal from the banking community. But I wanted to talk to Patrick about that and just walk through, what the next year or so is going to look like and what else they've got planned, what the news flow is going to be like. I think people kind of expect this to be in sort of the quiet part of the Lassonde curve, but I don't think it's going to be there very long. And certainly based on the numbers that Bombori is throwing out, there's quite a bit of room for re-rating here as it goes to production. And that's what normally happens with a gold miner as they put their first mine in production. So congrats on the package, Patrick. Thanks for coming on. Can you just kind of give us a thumbnail sketch of what this package looks like, the whole thing that you put together?
Yeah, thanks, Eric. And I really appreciate your words. Yes, we really do believe this is for a junior company with a single asset development project in Burkina Faso. In Canada, it's difficult to get financing, even as you've seen, but here we were really, over the moon, particularly during COVID, which has restricted people's ability to get financing with banks not being able to visit and things like that. Look, we've been in the game a long time. We're very patient people. We're big shareholders. We were not prepared to give away the upside in a debt package deal. And we got something here that we are so proud of and so pleased with in regards to the debt package. And it really leaves the upside for the shareholders. And we brought in Coris Bank. They were a shareholder, and they knew about the project, and they were keeping in touch with us as we were moving along. We were advancing the discussions with several debt funds and other senior debt lenders, and we had got a fair way along the track. But again, COVID restricted that. And in the meantime, we finished off as you see in the background behind me here, finished off all of our villages, de-risked the project.
Right.
I went down to Burkina in September, and I met with Coris. And they became quite, aggressive in wanting to get involved. And we said, look, the debt package we need is something around 140 million, which was a bit beyond what they were capable of. Right. But then we just started the discussions with our biggest shareholder, RCF, and they really accelerated. And it's been a pleasure dealing with them, how flexible they've been with us and the terms of the deal that we got. So Coris are putting in $100 million. It's at 8.66%. And let me tell you, it's 8.66%. It doesn't have hidden fees. So you see some packages, juniors in Canada, where they say it's 8% financing. And then when they do their drawdown, if you read their financials carefully, they'll say, we drew down 5 million of our financing with which included a 2% discount. So in other words, it's a 10% financing, not an 8% financing. We have none of that. We don't have political risk insurance in West Africa. That's a huge cost, particularly in Burkina, at least 2% more. We don't have that. We don't have royalties. We do not have gold streaming. We do not have gold lookbacks. A lot of the ones you've seen in West Africa recently had, say $150 million of debt, but they had a 5-day gold lookback. And if you look at the volatility of gold over the past 12 months, that's worth $20 million on a 150,000 ounce a year producer. Right. That we do not pay. It's into our pockets. We don't have gold prepays per ounce for 500 or 800,000 ounces, none of that. So that was, it's an excellent package, and we don't have withholding tax. So in West Africa, when you sell your gold, you have to go out, you sell it in dollars, you bring your money back in the exchange rate in French francs, then you pay back your debt holders in US dollars again with a withholding tax. It's not huge, but it's another 1% on your debt. We don't have that.
Right.
So it's going to the bottom line here, all of our debt. But one key thing I want to talk about with these guys, we sat down with them. They visited the project. They know the country. They didn't announce themselves as potential debt suppliers. They went and visited the local villagers. They speak the local language, Mossy. They were extremely complimentary of the community relations that we have, how supportive the people are of the project, etc. And we talked about the expansion, and they looked at the expansion, and they looked at the sort of why we were building 2.2 million tons of sulfide when there's they did their own due diligence and said, look, there's a very large sulfide deposit beneath this, and it's in reserve. Or why are you not looking at something bigger? And we said, well, look, the debt package we were looking at restricted us to $65 million of cash that we could grab for the sulfides, which added up to 2.2 million tons of sulfide per annum. And we'd like to build it bigger. We think we can. Our exploration shows we can. We're wide open still. So they came back to us with a structure and said, look, if we divide this in two and give you a piece of debt, if you pay it off in 1 year, which, at $1,300 gold, our free cash flow after tax is 98 million. At $1,700 gold, it's like 180 million. If you pay off the 30 in year one, we won't give any more cash sweeps. You guys have at it and build what sulfide project you need. We're over the moon about that, because we think we can build a bigger sulfide plant and make this a 200,000 ounce a year project.
And so what would it take for you to make the decision to go from 2.2 to say 4? What do you need to know to be able to do that?
It's purely drilling. I mean, right. I think, when you look at particularly Maga Hill, I think you follow the story fairly well, Eric. We did quite a bit of drilling in 18 and 19 on these high grade structures.
Yeah.
We had very successful hits on that. The model is showing that they absolutely continue. P17 South, I just want to get back at it. We stopped drilling when we had reserves, but we stepped out quite a bit, and we've continued to hit. And we will be showing the market here as we put the model together. What the pit looks like on the current reserves, and what the resources look like, and how wide open it is, and where the next set of drill results are. Literally 600 meters up. Right. This looks like a big, juicy, high grade deposit. And so Chorus have looked at that, as have RCF. And so they're looking at, how do we structure this debt so that you guys can drill, add to this, and look at a bigger sulfide deposit. And so we're putting together our data now. You obviously know we're also putting together a new resource.
Yeah.
So we think both oxide and sulfide can grow. So this is only stage one for us. Right. And I've always done it this way. When I took over Orezone, I looked at it, what can we build? Orezone, it had a bit of a checkered history. Yeah. I had to steady the ship, get it back on track again, look at how we could build something, keep it, and something that we could, naturally build. And it started to evolve itself. The story has really started to come together now. We've had some hiccups along the way in terms of, like, the Semifo incident stopped our financing. Then it was COVID, but we were patient. We stuck with it. And I think we're absolutely there now. And I think there's massive upside to this project. And we've got a debt provider that sees that and really wants to help us get there.
And why is it that you have been able to do this without the political risk insurance? Is it the specific location of Bombora? Is it because it's Chorus?
It's Chorus. Right. I think if it was in the north, Chorus would be looking at some form of insurance, political right. insurance. But look, they're in country. All of them, they're very, they've got over 2 billion of assets under management. They want to expand into other parts of West Africa. They've gone into Mali a bit with Hummingbird. But now they've found a partner that they believe they can develop business with, which is RCF. So instead of having to spend time with the issue with Chorus and the international banks is Chorus terms are so much better. The international banks don't want to go with it, so they cut them out all the time.
Right.
And this is their opportunity now to show that they can finance a project like this alongside a major debt fund, international debt fund.
Right.
They see it as a great stepping stone for their business model.
Right. Okay.
And so because they're in country, they don't want that extra 2% of political risk insurance that other people want. And to be frank, political risk insurance doesn't get you on terrorism. It doesn't cover terrorism. It's just another money grab that they want.
Right.
I hate to say that way. Political risk insurance covers the government grabbing it off you.
Right.
That's what political risk insurance covers.
It's expropriation, not terrorism.
It's expropriation.
Yeah.
It's expropriation.
Yeah, which doesn't seem like much of a risk in Burkina. It's clearly they're very supportive of the mining.
Oh, and but just on that point, us doing this debt with Chorus, I was down in Burkina for the past 12 days. We've been preparing for getting on site. I was meeting with various ministers. I actually had an invite and a private meeting with the president of the country. This project is in his jurisdiction. He was so effusive in his praise for what we have done by getting our debt done with a local bank, getting the support of a large, well-known worldwide private equity group, that it's giving them the confidence that Burkina will still continue to get investment here going forward and building, because they see mining as a huge part of their GDP and their growth.
Right. So what is it now that you've got this money in place? What do things look like going forward? What's the progression from here?
Pretty fast.
Yeah.
So, I was there. The mining contractor's on site right now. We'll be sending out some photographs on that. He's moving equipment. We've picked a local contractor, by the way, on a very competitive bid process. And we will be working closely with him. He has formed an alliance with Komatsu. So Komatsu will be doing all of the maintenance of the equipment.
Right.
And we've got a very competitive price, and we have sharing here in productivity, so that, if things go well, we get an even better price.
Right.
And great guy. I met with all their team about 10 days ago. They're now on the project. They've mobilized a fleet of trucks. They've mobilized a bunch of excavation equipment. So we will start the OCR, which is the water supply.
Right.
We have hired Lycopodium. I don't know if I can show you a slide here, but they built, probably 8 of the last 10 plants in West Africa. We got the team that has just come off Yaouré, which was a highly successful build for Perseus in Cote d'Ivoire during COVID.
Yeah.
Came in under budget, ahead of schedule. We've got the team that's come off that. They were at WAF right next door. So the construction manager, engineering manager, they're all ex-WAF guys.
Right.
We've just hired two more senior people on our side, ex Perseus, who have just come off Yaouré. So this is moving along very, very fast. And one of the key things that Lycopodium did was they're so confident of this being a successful project, they have guaranteed us to be up at full tonnage within a month of startup.
Okay, nice.
Now, can you name me a Canadian project that started up, was at full tonnage and at steady state in a month?
Nice.
No,
Yeah.
they don't happen. Somebody said to me, "Oh, Malartic." I said, "No, Malartic didn't. They had to retrofit a crusher into the SAG circuit because they couldn't get the throughput."
Right.
Getting up to full tonnage is huge. So, there'll be lots of news coming out. Obviously, as you saw, we've looked at it ourselves. People talk about you being in the Lassonde curve. No, we're actually starting to come out of the Lassonde curve.
Right.
If you look at Pure Gold, if you look at Orla, if you look at WAF, all of them, had a hefty appreciation. Rocks Gold was the same. Who was the other one? There was a couple of success. Atlantic Gold, from construction to first gold pour, provided you're successful.
Yeah.
Provided you're successful, your share price appreciation should be at least 125%.
Right.
In the case of West African, it went 4 times.
Now, in terms of news flow, I mean, obviously the first thing you guys need to worry about is building this thing.
Hmm.
And there's a couple of points about the construction period that I think are worth making. One, I think, uh, you and I've known each other a long time. I know you wanted to build Bombore,
Hmm.
and you've built mines before. So this wasn't a, you know, I guess shareholders should understand that this building the mine isn't a consolation prize for you. This is what you
No.
wanted to do.
Yeah.
And I think it's worth noting that I think there's an assumption that, okay, Orizone's building the mine. That means, if you're somebody that plays M&A, they're going, well, there's no way there can be any M&A until a year after it's done, which isn't really true, because and that feeds back again to the finance package you put together. Part of what holds up M&A when a company goes into construction and production as a one asset company is quite often there's just so many hairballs and there's so many strings attached to the financing, and it's all stuff that an acquirer has to either live with or pay for, buy out essentially to get rid of. And
Yes.
quite often the costs for that are much higher than people think. Do you want to touch on that? Because I know you've been on both sides of that situation.
Yeah, yeah. Look. I've always said, Eric, I'm not a guy who's, gets up in the morning and say I want to be a CEO for the rest of my life.
Yeah,
I'm a shareholder who wants huge value. That's what I want,
yeah,
and we see the value in this as being a build, and but also we really understand the upside of it as well, and something we want to show the world in terms of the upside value here going forward. If you look at Bombori very quickly, it has one of the largest ounces per vertical meter out there in open
yeah,
pit. It is quite a unique deposit. Now, some of it is lower grade, but a lot of it is not. So, but one thing that we did get, and it's a great point you make about the financing, is we have not burdened this project, and producers, they know. They've been through the debt process. They know what debt costs, and they know the hidden things that go with debt.
yeah.
So, and I can tell you the inbound congratulation emails that I've got from other CEOs of producing companies has been quite, effusive in their praise. Well done. Didn't think you were going to get that. Thought you were going to get a streaming deal. Great deal. We should chat. Blah blah blah. But we want to show that that our construction's going well, and we believe that will. We've got Lyco on board. They're very competent. They're going to take bonus and penalties on the capital cost. We've gone through a reconciliation, all of the capital costs over the past month with Lyco. So believe you me, we're confident of where the capital is going. The operating costs are another huge thing. Power is a huge point going forward in the next couple of months, maybe even before that. I expect to announce that we've signed a long-term fixed price power deal that's going to be very attractive, one of the first in Burkina,
Right.
which will not burden it with power, because with diesel power in Burkina, you're up and down. I mean,
Yeah.
your heavy diesel is 20 plus cents, light diesel it's 25 plus cents. We're not going to be anywhere near that and have a long-term power contract. So as you do that and build out, the takeout premium is going to get better for us, absolutely better for us. And by the way, in this day and age, you do not see a lot of producers taking out development projects. They're looking to see it de-risked,
Yeah.
and what risks it is a bad financing package.
Right.
They turn away from a bad financing package. They do not want to take on a bad financing package. They want, something clean, neat with growth, and I think we're going to provide all of that. And I think everybody will do extremely well out of this. I do not want to be a single asset company going forward.
Yeah.
It's not the business plan for a mining company.
Yeah.
But like everything else, we will be patient and we will get the right deal at the end of the day for our shareholders.
Right.
Bearing in mind, we think we've got huge upside here from a production profile.
And we're just to elucidate on that a little bit. Maybe we probably are both acting like we're sort of preaching to the choir here. Maybe if we take a quick look at the metrics on the feasibility, just so people can get a sense of what the numbers look like on this.
Yeah. So we did, first things first as well. We've done all our reserves, and we continue to do our reserves at 1250.
Okay.
So we're very conservative people.
Right.
So the economics were done at $1,300 gold, and 99 $100 million of free cash flow in year one. In year two, we build the sulfides with 65 million, and at those gold prices, we had a 2.5 year payback.
Right.
13 years of mine life, 1.6 million ounces of gold production. At 1750, it's less than a year payback. So including the sulfide expansion for 2.2 million tons. So there shows you where we believe we can expand even further.
Right.
It's a unique deposit. It's got, a lot of oxide associated with it. It's if people want to benchmark it against a smaller project, which is Robex in Mali, they are, it's the same type of oxide as us. It's a shear zone. There are many different oxides, and some that are more intrusive related. Yes, they are more difficult to deal with. We're not. It's a shear zone.
Right.
And so it is very, very simple and easy to deal with in terms of both mining and processing. But they do about a third of our tonnage. They're the same grade or a bit less than us. Strip ratio, they're a bit higher than us. And every quarter, all-in sustaining costs are $700 US.
Right.
So, and they're diesel generated. So they're 26, 28 cents a kilowatt hour. We
Right.
will not be that. So you can see what we're going to be throwing out here in free cash flow. And so now we can look at exploration, because the banks have not asked for cash sweeps.
Yeah.
So we've got that cash. We can also build a bigger sulfide project.
Right.
So, and we've laid out the plant to do that with lycopodium. So by adding a ball mill alongside the sulfide SAG mill and adding 4 more tanks, we're at 4 million tons per annum. So now you're looking at 200,000 ounces plus a year, and we've only drilled these things down 100 meters. The average depth of drilling is 160, and now we model this and we're redoing our resources and reserves, but more so on the modeling of the exploration, where we see this upside of high grade sulfides. It looks fabulous, and we think we will be a long term 200 ounce a year plus producer out there.
And what do you need to do in order to get to that decision about, do we do 2.2 or do we do 4?
Well, the great part, the great part of it is, our drilling last year in 2019 and 2018 was pretty focused, and so even though we added some reserves, our drilling has really shown that the targets, they're inferred. You can see them. There's drill holes in them, so it's not as if we don't have drilling. We're not sort of pie in the sky looking at this going, is that really a target? No, we see it, and we've drilled into it. And in fact, some of it, if we just do 50 by 50 meter drilling, we'll have it into reserves very quickly.
Right.
So it's not a lot of money. P17 South, I mean, we just stopped drilling, when we literally, when we were going into, we said, look, let's keep our treasury. We're going into debt financing and engineering. So we stopped drilling at that point. Right. I mean, we were still hitting these, multi-gram hits out there. And we drilled a target to the north of it that was surface. Oh my goodness. I mean, it all looks to be joined together.
Right. Okay.
So, and that's, the reserves at P17 South are plus 2 grams sulfide at 96% recovery. Can you imagine the juice that adds to us?
Yeah, no, that's going to bring your per ounce down even more. It's pretty good right now at 730.
Yeah. And so, and the other thing, a really interesting thing is, WAF and, smart guys, they went out and bought Toega off of B2, it's on the other side of the river from B2's project. So it was going to be way more difficult for them, a major river to get that to their project. It's on the same side of the river as ourselves and WAF. They've got it. High grade, happens to be a folded granodiorite, and it's directly due south of our P17. And so we've got a huge land package to keep exploring down there. Right. I mean, we found P17 south by accident. It was the artisanals found it.
Right.
We thought it was the same shear zone. It wasn't. It was a folded granodiorite limb. And now we see it keeps repeating itself.
Okay. So how are things look in terms of what do you envision as being sort of the news flow to the market in the next few months?
Well. Obviously, as we start the mining contract, we'll get that out. As we award the power contract, we'll get that out. As we start the civil construction, we'll be doing photographs and updates and drone, videos on where we're at, keeping everybody informed. So people will start to get a feel for what our true, cost and schedule is going to be. Hopefully, we are able to, ring fence some of the capital that we raised, or we've got a couple of other ideas up our sleeve here that will allow us to continue to drill during that period.
Okay.
But in the meantime, we will show the world the exploration targets now that we've got a better handle on all of them.
Yeah.
And we will show what we believe we can go to. We will have a new resource and reserve update, which will show that we could expand the oxides and the sulfides with just what we're doing right now.
Okay.
So yeah, I mean, I think there'll be a lot of news coming out here. So from the point of view of just going up the Lassonde curve from purely construction, we think we're going to have other news that's going to help that along as we move.
Okay. I think that covers everything. The the slide they threw up here is, I think that probably tells you everything you need to know, and I agree with it too. I mean, it's what I've been saying to subscribers for a while now is, Orezone is one of the few that's got all of this stuff put together that hasn't yet seen that appreciation. But there's no reason to assume it's not going to see that, and potentially more, given what the metrics look like on Bomboré. Everything's going very smoothly. So I mean, I think this one's a bit of a no-brainer, quite honestly.
Look, you're right. In summary, when you look at Orezone, great financing package, no strings attached, with a group that knows the country and another group that knows the company.
Yeah.
So what's your downside here? It's very minimal. What's your upside? We start hitting our targets and we show that we're going to grow.
Yeah. Yeah, I think that combination of the news that's potentially on the way here, that's not just that they're going to be able to get to what's in the current model based on the current package, but that you can in fact push this thing up to a couple 100,000 ounces a year. And there aren't that many 10-year plus 200,000 ounce producers around. I mean, I think you'd be getting a few people knocking on your door.
Oh yeah, look, there are not, and as I said, our average drilling depth for an open pit is 160 meters. I mean, that's nothing. Like, you look at, just take that down to 240. I mean, you've got a long life there.
Yeah.
And potentially if you look at projects like Fekola, like Centamin, they started off at a certain size, but they had a bigger resource, so they just made it bigger and bigger as they got, the cash flow and and whatever else that went with it. Right now Centamin is mining at 0.6 of a gram sulfides.
Right.
Just think about some of B2. Look at the B2's project in the Philippines.
Right.
82% recovery. We're up in the high 80s in our sulfides, higher strip ratio, and it's making just an absolute, it's a cash flow machine.
Right. Okay, great. This is a great story. I mean, I followed it a long time, and I'm sure I'm going to be following it for a long time. Thanks for coming by, Patrick. Like I said, I think it's a no-brainer here. You just have to buy it and kind of forget about it and watch it.
Yeah, that's right.
Construction.
It's just buy it and forget about it. It'll be a lot of news flow, and it's going to be, I think, very, very positive.
Yeah, and I don't personally see much operational risk, because I've known Patrick a long time, and this is not the first mine Patrick has built. He's built a few of them, and like a podium, like you said, has built pretty much everything in West Africa for the last few years. They're always the guys. So I think it's great.
When you've got a free dig open pit project with 1.5 to 1 strip ratio, you got to go somewhere to screw it up.
Yeah. Good point.
I think I can even make that one a success.
Okay, there you go. There you have it. Orezone Gold, ORE in Canada, ORZCF in the US. Great story, great project, great management team, cashed up, good to go. Thanks, Patrick.
All right, thanks, Eric.